As we discussed earlier, the European Union is working out how to save one of its member countries, Greece, from running out of money. There have been scenes of anarchy in Athens as rioters clashed with police over tough spending cuts. If it ends up defaulting, some analysts fear we'll go into another global financial crisis.
Greece could be the first domino. It fails, then Portugal, Spain, Belgium, the German and French banks, and then the American banks, and we are in the soup, just like 2009.
He disagrees with our local analyst, Michael Pascoe, who was here a moment ago telling us not to worry, but some people are. Do Australian families need to be ready for a recession? Joining us now is Wilson Luna from Your Money, Your Family. Morning to you, Wilson. Nice to see you. Now, many Aussies or feel they are still battling after the last big financial meltdown, the Lehman meltdown. Even though our economy actually fared better than virtually any other, what are we facing at this point?
No, it's a $1.2 trillion question for most economists and financial analysts. The problem at the moment is not, I don't think it's the current problem. It's more, we know it's an aftermath of the global financial crisis, but we're thinking to ourselves, OK, is it just a tremor, or is it a full-blown, once it rolls out and we start getting the knock-on effect, will it be a full-blown earthquake? So we're sort of still trying to analyse that, but it's definitely a problem that's keeping a lot of economists awake at the moment.
A lot of economists employed too, which is nice.
Yes. We just heard Michael Pascoe say that we didn't have anything to really worry about here, that everyone was just freaking out. What do you think? Do you think that Australians have something to be worried about?
I think traditionally, had this happened years ago, it would have been a different scenario. But on the back of a global financial crisis, we only have to look at our markets in the last few weeks. Basically 25 billion was knocked off in one day, then 30 billion another day. It's something that, on the back of where it's coming from, I think it's an issue. And more than that, I think it's not so much the 1.2 trillion that's an issue, or even the surrounding countries. It's the knock-on effect it can have to things like our debt, etc., the cost of debt, etc., rising, and hence potentially mortgages going up, etc. So, yeah, I think it does have a knock-on effect. Not the original. So I agree with him in terms of the actual problem there isn't huge in world-scale basis, but as an overall problem, if it starts knocking on, it will be.
So if families have market investments, Wilson, as an advisor, would you be advising that people pull their money out or just redirect their investments into what we know are very strong markets at the moment?
Yeah, I think it's foolish to give blanket type advice like selling, etc. I think the first step's easy. Go review your investments. Look at three main things. Number one, have a look at the time frame which you're invested in. Number two, have a look at your risk tolerance. And number three, have a look at the diversity in it. If it's all congruent with your time frame, etc., it might be okay just to hang off and sort of walk through it and wait till the full effect of it's felt. If it's not, however, maybe it's a good idea to start looking at maybe rebalancing your equity portfolio, etc.
What do you mean if it's congruent with your time frame? What does that mean?
Okay, well, if you're invested over the long-term period, generally, historically, the markets will bounce back no matter pretty much nothing. So you can afford to wait. Whilst if you're in the short-term time period and basically you're a lot in equities, you might be in a bit of trouble.
All right.
What's your other key advice to Australians?
Probably a few tips. Number one is potentially, be ready by, having an emergency fund there, 3 to 6 months worth of savings in case of redundancy and in case of interest rate hikes. Number two, invest in yourself, i.e. upskill yourself as much as you can. Like they say, the best piece of real estate in the world to invest in is between your two ears. Not only that, if potentially there is a scarcity in jobs, one of the good things about it is that it picks you right up there in order to be able to get them. Number three, get rid of debts as much as possible. That way, if you walk into a recession for whatever reason it does happen, you've got less repayments. Number four, like we said, review your investment strategy. And number five, have a look, review your insurance policies, because for two reasons. Number one, to make sure you're protected during this period. And number two, and probably more importantly, you might be able to save some bucks in the process.
But what you're telling Australian families too, that they need to be saving, is that not going to affect things if people are not going in and spending money in retail and so on? Is that not going to push us further?
Here's the thing, at the moment what we find is that most families are tight anyway. I mean, the feedback we get from our website is families are tight at the moment anyway, even with full employment. So we're saying, look, we've got a great employment record at the moment, but unfortunately there's no spare money at the moment for families. Mortgages going up, groceries going up, and basically, energy prices going up. Most families are tight at the moment. So my suggestion is try and tighten up a little bit more in case something happens. You've got a little buffer there, because without a buffer you're going to be in trouble.
We are one of the richest countries in the world, across the board, across the whole spectrum of Australian earnings. We are exceptionally rich. Yet everyone's feeling the pinch. Are we just an overcapitalised country?
$1 billion question. But the reality of it is that I think we've got a two-speed economy at the moment. Like most people are saying, we've got the mining sector and we've got the rest of the economy. And I think what's happening at the moment is we're getting different views on it according to numbers, how the numbers are getting read. So I think it's a matter of seeing this pan out and seeing how I suppose it looks in the long run.
All right, Wilson, thank you so much. I'm sure that people at home are thinking, how do we tighten up even more? Yeah. That's the advice. All right, thanks so much, Wilson.
Thank you, guys.
You've got to read Wilson's tips.
Yes, that's right, but how do
Pull
they
your kids
tighten
out of ski
even
school,
more?
do a massage course and pay off the Pajero.